Hey, good day, guys. Want to do a quick recap on the market analysis and one of the stocks I'm looking for next week. So overall, SPY structure is still bullish. Best trade on spiders is always a fake break, up move, fake break, slight up move, sideways consolidation, fake break, another up move, same thing all over again, up move, sideways consolidation, a fake break, up move, sideways consolidation, fake break, and an up move. So overall structure on the spiders is still bullish, which means it's going to be easier to trade. Uh, one of the stocks the other market we're looking at is QQQs. Um, so overall, the structure on this is has come off from this sideways pattern, right? And so now we're starting to emerge from out of this. Now look at the FANG stocks. Let's look at Facebook. FANGs had a pretty good week last week. Has been monitoring it. So overall, on the daily chart, nothing much to do though. If you're trying to buy support, then it's gonna work out for you. But if you're trying to buy breakout, not so much, right? Now we are in the zone of 124, where there is a gap fill play over here after the big gap up. So I don't see much going on in Facebook unless there's some real momentum coming in to push it through. But I see some kind of sideways consolidation on here for Facebook. The next one on the list is Amazon. Let's see. Same thing, similar structure. The only thing is it's flagging out and it actually broke out on this. Now, best case scenario is a flag out on the side before an up move because it goes on the third move. Chances it's gonna get faded down all over again. So structurally, it's good, but it needs to make a side move from here on before it starts making its up move. Next in line is Netflix. Netflix broke through its highs last week. Let me show you on the chart. Uh, so after this up move from 117 to 130, had a big flush. Now had a side move consolidation. Not the easiest of the stock to trade intraday. You can see from all the zigzags on here, right? So if you're looking to swing trade, it's great. But if you're looking to day trade, not so great. Um, so overall, the structure is up as well. This is what looks like one of the stronger names in the FANG stocks. And last but not the least is Google. Uh, Alright, so on Google, what you're noticing on here is a potential for it to start ripping too, right? I mean, it did everything that is required, a sideways consolidation. On the weekly chart, you will see it's a bit more clearer than the daily chart. You can see a better perspective, right? This was a failed up move, then it was a failed down move. Now looks like the other name that could go is going to be Google. Facebook, Amazon doesn't look too strong. Netflix is stronger. The next in line looks like it's Google. One name that I would be looking at next week is for tomorrow actually, for not for the next week, for tomorrow is AKAO. I'm not sure what is the story behind this stock, but after this up move, it did do a sideways consolidation. If you look on the daily chart, it would be easier for you to look at. Let's see. So up move from 8 to 16, almost doubled in 2 days. Then we had a sideways consolidation. Whoever is trying to short it against this $14 level, chances are he or she is going to start getting the squeeze, right? Because they will be sitting in some pain. So on the up move, we had about 2 million shares, then there was 1.7. And imagine if you're trying to short, right? You're trying to find a lower high for it to short all over again, which you didn't really get. This kind of negated on the $14 level. One thing that I don't like on this AKAO is this RSI. It's a negative divergence, right? The stock might go. It's going to be a quick trade. It's not going to be a buy and hold. It's a negative divergence because the stock is going higher, but the RSI is actually going lower. So momentum is kind of waiting off. Other than that, give me a follow on Twitter or StockTwist at WatchListStock. If you like my videos, feel free to subscribe and like the video. Adios.